Good evening, everybody. Hope everybody's having a nice summer evening. Except I see there's a line of powerful storms going through the Midwest right now. All right, we'll get started. That's all right, too. Rather have the warning and nothing happen than not the warning and something happening. Okay. Paul, no, I say no. I've used all of them at points in time, but the most important indicator that I use is the signals. And as we saw last week, not quite a bearish engulfing signal on the Dow, but the close back below the T line gave us two pieces of information. One, obviously, they're closed below the T line. Two, they're going to have a hard time getting to a new high, which means if they're not getting to a new high after an uptrend, that means they're starting a downtrend. Now, what was not as obvious in the Dow was much more obvious in the NASDAQ. So we had the bearish engulfing signal followed by the gap down. And not only did they gap it down below the T line, they gapped it all the way down through the 50, which the 50 up until this point had been kind of a significant bounce point. See if I can make this so I can see it. That's the 50, whoops, maybe even more. That once it bounced up, came up through the 50, supported on it, supported on it, supported on it. Now they're not supporting anymore. So that's given us a pretty clear indication that the bears are now in control. Even though we had kind of a wishy-washy day today in the NASDAQ, the S&P was still down, and the Dow tried to come up on the close, but apparently in the last 30 minutes, they just started taking it back down again. So one very simple statement. Anytime you see a candlestick sell signal and a close below the T line, you're on a downtrend, and you see a candlestick buy signal and a close back up above the T line. Interest rates are moving, bond prices are moving down fast, which means interest rates are moving higher. So let's make this a little bit bigger. Might have a bounce from here. Do not have a reversal signal. Do not really have what I would say a belt hold in the sense that it didn't move drastically away from the type of movement we've had so far. We might see a bounce in interest rates soon. Crude oil prices did a bullish engulfing signal today. Where? Right on the 200, back up through the 50. You still have a doji gap down, so it's still going to be important to see it get back up through the T line. If it fails here, that just tells us that this is these waves are in progress, that this one could still come down and basically test below this last little price move. Okay, let's see. That was crude oil gold, as we can see. When it got clobbered the other day, that's usually a change of investor sentiment. A doji gap down from the T line Stochastics heading down. You're in the oversold area. However, nothing yet has changed. The scenario or the graphics, the investor sentiment have been changed. Same scenario with silver when they gapped it down. When you gap something in a direction, especially after a doji, because that's a day of indecision, and then bam, they really decide which way they want to take it. That it's usually going to create the investor sentiment to investor sentiment is going to continue in that direction. Hey, I'll try to repeat the same symbols as what we're looking at as we go through. The grains, this is soybeans. Soybeans tried to pop back up, but as you can see, it's in this very slow downtrending channel. Same thing with wheat. Wheat reversed and not doing too much of anything, but pretty much telling us that the top of the trend channel is staying intact, which means probably the bottom of the trend channel will stay intact. So you probably see wheat moving down into this area. Corn looks like it's trying to bounce up off the 50-day moving average. I say trying because the stochastics are still heading down, which tells me I better see a very strong signal telling us there's a reversal before jumping into anything. Let me see what some of the others. Cocoa did a hammer doji today in the oversold area. Start watching for a bounce there. Sugar is not something you really want to trade right now. It's just moving sideways, and it's probably caught between the T-line and this lower trading level. So I wouldn't do anything with sugar until it could get back up through the 50-day moving average. Gold, silver, dollar. Dollar has finally hit the 50 on the first bounce up. Japanese yen stuck in between the 50 and the T-line. British pound did a bullish engulfing after a hammer type signal off the 50-day moving average. The stochastic still heading down. If you are buying this on a positive open tomorrow, with the stochastic still heading down, my interpretation of this would be that they're going to bounce it back up to the T-line. Then you have to watch to see if they can take it up through. If they bring it back below the T-line or stay below the T-line, that's just telling you the stochastics are telling us we're still in a downtrend until we can see a very strong reversal signal. So I wouldn't be buying this, even though it's got a good signal to it, until I see more confirmation and starts curling the stochastics back up. Okay. All right. What else? I'm trying to think of what else we have over in the euro. Euro might be doing a bounce off the 50 and the 200. Okay. Not very much on the long side. The only long position I've got right now is INFA. And if it doesn't do anything real positive tomorrow, I'll probably close it because it's telling me that they aren't moving it up yet. Now, not necessarily, not that they're moving it up, it's just that they're not moving up because the market's not trading real positive. So I can get out in a flat position when the markets move down dramatically, then I can use those funds someplace else until we see this one break out one way or the other. Okay, and NXST is one that I closed out the other day, not necessarily because it was finished with the uptrend, but with the markets trading off as hard as they were, figured the uptrend would not continue with any great vigor until the market turns around and starts heading up. Even if that turnaround and heading up is just a bounce in the market, in the Dow, that might eventually be bringing us back up just to test the T-line. But again, until we see a real strong bullish signal, we got to just kind of infer that this market is still in a downtrend. So if you do see a strong price move, like Halo today, did a bullish Harami on Friday, strong bullish confirmation today, kind of a scoop pattern, not a real clean scoop pattern. But basically, we're seeing buying on a day where the market was pretty much selling off. We saw buying on Friday when the market was a little bit indecisive. So we saw that the selling had stopped, and this confirmed that now the buying's going the other way. Keith, I probably won't be getting to individual stocks tonight. We've still got guests around, and so I want to just go through some that are looking good and then do some of the biggies. CADX, bullish Harami, closed bullish with confirmation both from the T-line and the 50. This one I wouldn't be afraid to be buying because this is telling you something's happening here, not necessarily what's happening as far as the market in general. So this one, again, you don't need a relative strength indicator to tell you when something is acting relatively strong versus the rest of the market. That's AKRX. Another one. There's that big inverted hammer, almost a kicker type inverted hammer, and now bullish confirmation, which tells you the profit taking here was over. Now they're confirming the signal or confirming the fact that the bulls are in here pretty strong after our buy signal. I wouldn't be afraid to be buying this one tomorrow on positive trading, again, using the T-line as your stop. Chiquita Brands also, somebody pointed this out today in the chat room, that was doing a nice little morning star signal back up above the T-line. This one can be bought on positive trading tomorrow. And MTDR, is still staying above the T-line. I don't know whether it's coming out of a fry pan bottom or not. Let's move everything over. It's kind of a fry pan bottom breakout, J-hook pattern, continuing the uptrend. This one I wouldn't be afraid to be buying on positive trading tomorrow. Chewy. This one can be bought on positive trading also. Telling us they're probably going to take it back up to the top of the trend channel. And MDXG. Little fry pan bottom setting up here. This one you want to keep an eye on. If it starts breaking out, especially a gap up, that's when you want to start buying this one. TVL is another long setup. Left-right combo after a doji hammer, staying above the T-line. If this one opens positive, you probably get 3 to 4 points in it. And Cray, setting up the little cup and handle. This one I would keep on my watch list. It's holding up extremely well, obviously, with the market pulling back. All right, now, obviously, with the market pulling back, you want to go with the flow. We recommended shorting HAR a couple of days ago because you had your evening star signal. And notice where the evening star signal occurred before they could take it back up above the highs over here, which told us that this downtrend was now persisting. You wanted to stay short as long as the market didn't stay up above the T-line. I'm sorry, above the 50. It was already gapping down through the 50 on right after the evening star signal. So that gap down after the signal through the T-line showed you that they probably wanted to go down to the 50-day moving average. But this tells you there's a lot more selling strength occurring. That this could change the whole scenario of this stock where it's being taken down hard. We also shorted MCO because it couldn't get up above the T line, and we had a doji bearish confirmation through the 50 that if it opened lower below this level, which it did, it gapped down through the support level. That told you there's still going to be more downside. You've had a little positive open that day. I'm sorry, positive trading that day, but closed slightly below where it opened. Gap down again today, still trading below where it opened. Basically telling you the sellers are still in control. Let's see, we need to get the stochastics a little bit more. There we go. So the stochastics have been in the oversold area now since for the last 2 or 3 weeks. This one I would still suspect is going to come down and test the 200-day moving average. All right. GHL. Oh, what did I do here? That's not what we want. Oh, GHL. GHL. The reason the force is so strong here is, again, we had that bearish Harami followed by a gap down, pushing everything through the moving averages. It pretty much told us that they were not going to a new high, which going to the 200 was conceivable. But the fact that they did a bearish Harami and then followed by a gap down, that not only told you they're not going this way, but they're going back this way with a lot of downside force behind it. And that's exactly the type of thing that you want to get into, is a selling situation that has a lot of downside force to it. So that gap, again, is your best friend when it comes to analyzing a candlestick sell signal followed by a gap, or a doji followed by a gap down, especially through the T-line. As we see in CTRP, more than likely they're coming down to the 50-day moving average. So you can pretty much calculate, once it broke through the T-line, what your percentage return would be if they could get it down to the T-line. I'm sorry, down to the 50-day moving average. What did I just do? CTRP. Okay. The trucking stocks just now turning over. Notice the long-legged doji right at the same level it topped out before. Bearish left-right combo followed by a slight gap down. And today they closed it below the T-line. So we also know that they failed to go to new highs, a double top. That pretty much tells us they're coming down. Where are they coming down to? Well, we got a low right here, which would probably coincide with this coming down to about the $17 range. So coming from 22 and a quarter to 17, $5. That's a decent ready to return. Who is our guest today? I give up. I thought I was the one. Yeah. So I hope you're not sitting here hoping you're going to get anything better. You just got me today. All right, HOS. HOS again. There's that shooting star doji gap down. More than likely, they're still going to be taking this down. Notice that you still do not have a reversal signal yet. So the prospects are still that with your stochastics heading down, you've come down out of a kicker type, not a kicker, but a gap down after a doji through the T-line. They're still taking this one down. All you can do is, who can do better? Guess than Mr. B, Mrs. B. All right. And then Unix, UNXL. Today it got a little bit scary, but again, this goes to the same parameters that we had seen: a dramatic sell signal, meaning a bearish engulfing signal, taking you back down through the T line, failing right here at the 200, And then notice what they did today. The market was saggy. It was trading down, yet this one opened lower and started heading up. But notice where it failed. Smack dab on the T-line and started back down again. This one can still be shorted if they open it lower, because basically it's telling us that every time they've come up and touched the T-line, they've been selling off from that point. That's right, a saggy market, saggy. And, let's see, did we do GHL? Oh, yes, so the doji gap down. SZYM was one that looked like it was setting up. We recommended this one for a long today. Had it open positive. The fact that they gapped it down and did a spinning top makes this very simple. If they open this lower tomorrow, you want to be shorting because you've got a gap down from a hanging man type signal. Not quite in the overbought area, but it basically told us a story. They are not going up to new highs. They're taking this back down, probably more than likely back to the 200-day moving average. So there's a lot of times, I say a lot of times, but quite often, where something that looked like it was extremely good a few days ago, all of a sudden now has told us immediately that they aren't taking it up, breaking out into a new fry pan bottom pattern. They failed, and not only have they failed, now that shows us they topped out up here, and we're going the other way. So this one I wouldn't be afraid to be shorting with the idea that it could possibly come back all the way down to the 50-day moving average. VSAT. This one may be going on now. VSAT. Oh, that was VSAT. This one, the reason this one looks good is because notice that your fry pan bottom has now kind of turned into a dumpling top. Where do we want to be shorting these things? We want to be shorting them just as they're starting to roll over and fail. Is this significant enough? Well, if it moves from 69 down to 61, 8 points, that's a good 15% drop. That works quite a bit. It works all the time. YY came back up, failed at the T-line, gap back down, rolling over. Stochastic still heading down. If this comes down through the T-line, through the 50, more than likely they could bring it all the way back down to this support level. Another good percentage move. Now let's see, we did the trucking stocks. YRCW, left-right combo after a long-legged doji. Now a close below the T-line. What's this basically tell us? They aren't going above this level, so you've got a double top. That means start looking for the next support level, which will probably be the 50-day moving average, coinciding with this these bottoms right here. Also, ABFS. Another one rolling over. Be ready to short this one on any weakness tomorrow. AKAM, I am short this one, and it came up today. But the unscary part about this chart is that even though we've done a bullish signal, we're still below the T-line. We still have to see bullish confirmation. So as long as this one does not close above the T-line, no problem. Just stay short. More than likely, with them moving this close to the 200, that's where the majority of the money is going to start watching to be buying. So it will probably come down and at least touch the 200. Now, why am I saying that when we see that there's a bullish candle today? Because we've had one bullish candle after 4 weeks of downtrend, and we still haven't closed up above the T-line. Nothing has changed other than we had a positive day in a downtrending market. Yoku, this one, that little evening star signal, gap down. Anytime you see that gap down after they've failed a moving average, you definitely want to be shorting it because that tells you they're moving. They see that it failed and they want to get out of it fast. There's that little hammer, came up, touched the T-line, tells us there's more downside. at least suspect this, or at least to come down to this level, which still means you're in a positive trade. Then you have to see whether it holds at the 50 or not. But notice where this one started its downtrend. Doji, doji, hammer, doji, bearish engulfing, then it closed down below the T-line. Nothing spectacular about these charts other than the fact that it very clearly indicates when the bullish failure has occurred and the bears have started to take control. Wave 1, J-hook pattern. Wave 3, I would suspect if this was a 9-point move, it's going to be a 9-point move from here, taking you down to basically the $40 area. Another one that if you can calculate where your downside is, you can put on a bearish spread and take advantage of the price move that it's not going to be, that you're not going to lose anything by it really cratering. It's probably going to find a support level. This one also can be shorted on weakness tomorrow because with the stochastic still heading down and they've gapped it down away from the T-line, if they can't support here at the 50, that tells us they got to go to the next support level, which could be all the way down to the 200-day moving average. CALL, another nice rollover, wave 1, rolling over, and now notice that they closed it below this support level. This tells me there's going to be some strong selling in this one before it's all over with. Oh, and RLD. Gap down doji, target 200-day moving average. Very simple. And DANG was one that we were making good money with. Then it did a bearish signal, confirming the doji in the overbought area away from the T-line. Then they gapped it down again. That told us if you were still hanging on here with hopes that it would bounce back up, when they opened it lower, just close out the position immediately and use that money to go someplace else. HBI. There's a doji sandwich setup. Let me make this a little bit more observable. Doji gap down through the T-line. Now they've closed right on the 50-day moving average with a doji. What's the simple rule of a doji? They're going to move it in the direction of how they open it. If they open this one lower tomorrow, how big is the potential move? Same magnitude as that candle right there. Something that you might want to be looking at some puts. All right, just a couple more ones that we've been following are TRX, bearish engulfing, confirmed down below the T-line. This one could come all the way back down to the 200. HGG. HGG rolled over very nicely. Now notice how they're getting more anxious to get out of this. If they open this below the 50 tomorrow, you want to start shorting. Your stochastics are still heading down, and if they're telling us the 50 is not going to act as support, there's a good possibility they could be pulling the plug. I say pulling the plug. When they roll over like this, the bulls or the bears are anxious. The bears get more anxious. The bears get really anxious. They just say, get me out of this stock, and that's when they start slamming it to the downside. And let me see if there's that's HGG S.CLF. Another one that is just now rolling over. Now, the reason I look for the ones that are rolling over, obviously, is I'm waiting for that big move. I don't want to be shorting it after the big move. This one gapping down through this level pretty much told me this level was not going to act as support anymore, nor was this area. Closed well below that. This one I'd be short until I sold buy signal. And AG, another one of the mining companies, also rolling over that dumpling top. Now they've had a gap down, and they're still taking it down. This one can easily go, shoot, down to the the $7 area before it slows down. All right, I guess a couple more of the, let's see, one more of the mining. BVN rolling over. Another one I wouldn't have too many qualms about going short on in the morning. And this one, if it breaks down, is going to go like a scolded dog to the downside. Doji sandwich, which means they wouldn't be holding the 50, nor would they be holding this support level. That tells us the next support level would be what you're looking for. And what is that one? RDN rolling over, pulling the plug. They could take this all the way down to this level, which would 3 points on $11 stock. That's a good 26% return. All right. This market is not showing us anything that we really want to say is bullish. And again, the longer they now are pushing this market to the downside, the more skeptical people will become and start bailing out, and that's where there's still a possibility of a flush out or a blowout to the downside. If you see a big, huge day where they're just crunching it, what you want to do is you want to flip over to your 5-minute chart or even your 1-minute chart if they've moved down very fast. But typically a 10-minute chart will tell you when you start seeing selling or start seeing buying coming in the churning area. That's when you want to start stepping in to get the best prices for a rebound off of a big pullback. Okay, with that, are there any questions about candlesticks? If not, let's see. Are there early warning signals of signs of blue ice failure? Usually on a blue ice failure type situation, it would be if they came down and came back up. Yeah, the early warning would be that if you got back up here and you saw a shooting star or a doji or a Barry Shirami that telling you that you're not going through the 50, that's when your blue ice failure would be starting to come into place. Do you use the 100? I don't use the 100 at all, Frank. I mean, not that you can't use it. Just right now, I don't think as many people use the 100, so that means the big money is still looking at what's going to happen at the 200-day moving average. Does a Morningstar have to be lower than the previous candle day? Does a Morningstar have to be lower than the previous candle day? I don't know what that means. What a Morningstar signal, anybody remember what the Morningstar signal was? Or where it was? I forget which one. There's a Morningstar. I'm sorry. Evening Star signal. Okay, let me go back. You were asking about a Morningstar signal, and I'm thinking Evening Star. Have to be lower than the previous day candle. Not necessarily. See if I can find an example. Meaning the doji day, let's say this was more pronounced. Let's say this had opened up here and closed down here, so you had a dark candle. Then a doji type day, I mean, it could be flat. Then the third day came more than halfway up that candle. Yeah, you didn't need to necessarily see the indecisive day trading lower. I don't know whether I answered your question or not. Means a potential reversal up. What's a blow-off day? A blow-off day is when let's say, or let's say even this stock is they take it down big. You can see the volume is expanding. Everybody's just getting out of the stock and or the market. Let's say the market just has a huge day to the downside. The volume's big, the price moves big, and then they start coming back up. That's a blow-off day. That means everybody is just panic selling out, just blowing off their positions, and then the buyers come back in. That's kind of what you're looking for, is that big, exaggerated day where everybody's just panic selling, and everything's just being blown off, and then it comes back up again. Can you have a scoop pattern going down? Yes, an inverted scoop works just as well, just that slingshot effect to the downside. At oversold, do you like a hammer or an inverted hammer the best? It doesn't really matter. Sometimes it all depends on what the market conditions are. I prefer the inverted hammer because if it opens positive in an oversold condition, the probabilities immediately are probably 95% or greater that it's going up higher. Why is that the case? Let me see if I can find. We had one that was a inverted hammer. Which one was that? No. There you go. The reason for the inverted hammer being more effective than the hammer is because, remember, prices move based upon investor sentiment. The bears are happy, the bears are happy, the bears are happy, and then all of a sudden the bears are just nervous as all get out. By the end of the day, they're relieved. The next day, the bulls are right back in there. The bears were nervous the previous day. They're nervous again. They start making a decision to get out of this position. Whereas on a hammer signal, let's see if there's a hammer signal somewhere to illustrate. On a hammer signal, we don't know whether there's not any real major, not as stringent a change of investor sentiment. They've taken it down and they've brought it back up again. The bears weren't really nervous just yet. Then the next day when they start taking it higher, then they start getting nervous and getting out. But the next day could be moving up. The next day could open up here and waffle. But there's nothing to scare the bears out just yet until they really see the bulls stepping in and pushing it. Whereas on an inverted hammer, they've already seen the bulls there. They're nervous. And when the bulls come back in a second time, they are more nervous and they get out of the position. I hope that was a clear answer, and I hope it wasn't as rambling as I imagined it was. Can you show a J-hook pattern and how to use it with stops? Let's see. Anybody remember a J-hook pattern? Heath, I'll try to find one in the next, as we're looking at some of the charts here. Seems like China is in control of things. How does it look tomorrow in candles? Right now, we haven't had any change of investor sentiment. We're still heading down. What does fib level for support for S&P? I don't know, but I guess we could do it. Let's see. If we take not getting the info, so let's do it for the Dow. The Dow, to me, looks like it reversed, obviously, here. So if we put our fib numbers on here, starting from here, going to the absolute top, that tells me the 38% retracement support level is right here on this little support area. The 50 right here at this, let's see, let's make this bigger. At this support level where there's congestion, and it also looks like at the 200-day moving average, and then the 62% is down here. Oh, oh, that's right. See, CQB was a morning star. Now I forgot what the question was about morning star. They don't have to close above this level. They have to close above the halfway point of this level, or the halfway point of the candle that told us the bears were in control. Above that halfway point, the bulls are in control. This was even better because not only did it close more than halfway up this candle, it closed above the T line, which tells me we're probably still back in the subtrend. Okay. How far away from the T line is still considered a trade? Oh, as long as you can see that it's not anything outlandish. See, up in here, even this to me was still a trade. You're a little bit away from the T line, but you'd broken out through this level. This is kind of your J-hook pattern, where they come up, they pull back. In this case, it was kind of a double bottom type of situation, and then they take it back up. Here's another J-hook, where when they pull it back, it's usually indecisive. You can either be buying on the first positive trade, and or you can be buying after it goes through the previous high. Whoops. That's a doji sandwich. Just the fact that it opened lower after the doji tells you there's more downside. Okay, with that, I will do, let's say, approximately 17 minutes of questions. So, Jim, if you want to do the double line and do the second double line. Let's see. Okay, now I got to figure out how the scrolling to stop the scrolling. Is a dumpling top the inverse of a 5-p.m. bottom? Yes. Dumpling top is that slow rounding curve top that you couldn't trade, but once it gets to the other end, it's usually a strong breakdown. Since 75% of the stocks follow the trend, why have you bought calls today? I haven't, David. If you saw those calls being bought, it might have been previous days. I don't know how to get the previous days. Today, I only shorted. Oh, and the only set of calls I do have is Infi, only because it popped up. It looked like it had a nice breakout. I'll give it one more day. If it doesn't break out positive tomorrow, I'll close out the position and come back when the market's acting stronger and this one does break out. Copper, stay short. I think all of them are getting hit. Gold is short. Yes. Okay. QID, is that the inverse? Short the Qs. Yep. Stay long until you see a sell signal and they close back below the T line. SDS, not the same scenario. Just stay long until you see a sell signal. WPRT. This one, all you can do is stay short until you see a buy signal. Let me expand this out a little bit. Now we're obviously right here near the support level. The Stochastic's still heading down. So if it opens lower tomorrow, you can still be shorting it, anticipating they're breaking down into a new range. And EQIX, all you can do here is stay short. Now, I would probably, if I was short this one, I would probably use today's high as my stop. If it came back up through there, that shows after a couple of days of dojis that some buyers are stepping in. RAVN, stay short until you see a buy signal. If you want to go short, if this one opens down below the 200 tomorrow, you definitely want to be shorting after this big bearish engulfing signal. Goog, stay short until you see a buy signal, especially if this one opens lower tomorrow. Let's see, we did QID FXP. Another one where you can just stay long until you see a sell signal. That's the ultra short Chinese. Yeah, I would probably use today's low as my stop. It shouldn't come back down through there. The double short for gold, another one where you just stay long until you see a sell signal. GTN's holding up reasonably well. Now, again, if the market's sagging like it is, this would be one that if it didn't do anything tomorrow, I'd close out the position. Mostly because with the market heading down, a strong stock might at best just move sideways. So I'll use that money elsewhere until I see the market's turning around. Then I'll come back to the strong stocks and see if they're creating a new buy signal. And SPPI just went off in a never. SPPI, I'm going to put some. If you're buying, it has to get through the T-line, number one. Number two, it's got to get through this downtrending channel. It doesn't look like it's real enthusiastic, meaning even though they brought it up pretty strong today, you're still fighting the downtrend. So any long positions have to be very convincing to get into them, let alone stay in them. SWL, stay short until you see a buy signal. And IMMU did a long-legged doji today. Stochastics, a little indecisive. Very simple. They're going to move this one in the direction of how they open it. If they open up positive, it better not come back down through today's open. If it does, close out the position. If it opens positive, it better open positive and stay positive. ACAD, I wouldn't be in this right now, but I'd have a buy stop somewhere above the T-line. And I wouldn't be long this right now in this market. Again, some of these that are holding up well may only move sideways, but the ones that are moving sideways in a sagging market isn't producing any money, and it still has a high risk that if everybody gets tired and starts pulling the plug, they're going to start selling it off hard. Why put yourself in that position? Close out an indecisive trading position and put a buy stop somewhere above that would tell you that the bulls are back in control. Bank of America stays short. And GNW, did we do GNW? Another one that you can be shorting, but it has to get down below the 50 before I'd short this one. Let's see. ERY. Another one where you stay long. This is the bearish energy sector. MTG. Another one you can be shorting on any weakness tomorrow. MBI. Stay short. Look for the 200 on this one. GILD, another one. Look for the 200 on this one also. Amazon, wouldn't be long or short this one, but if I was at either, I'd be short with it anticipating it coming back down and solidly resting on the 50 before moving back up. Goldman, stay short, so you see a buy signal. Ford, back to the 50. It needs to hold above the 50, which looks like it's trying to do. For buyers, I'd be ready to buy on positive trading on this one. Again, because this is going to be the type of stock that every major money manager in the world is going to be looking at. And if it starts supporting at the 50, they're going to be buying it at the 50. Netflix, another one that's going to move in the direction of how they open it. This one has the potential of kind of that inverted scoop pattern. But if they open it lower, they could be slingshotting it back down to fill the gap. And Panora, Panera Bread. If this one, you can stay short, but it has to open lower and trade lower. If it opens positive, you got a potential if it's going to come back up and test the T line. Why risk it? If it starts trading positive, close out the position. If it opens lower, you can be shorting it because they're going to be taking it down to the 200-day moving average. Goodyear, stay short. Visa, oh, try another. DDD. Well, what makes this thing do that? For crying out loud. Okay, smoke them if you got them. Oh, I know it's probably trying to work. Did it come up just before I did it? Apparently not. All right, back to the Dow, since the ones that we bought up previously seem to. It's got a good possibility of coming down to this level. Because if this is a doji sandwich, remember, sometimes the full doji sandwich doesn't occur. That means the second day they take it down. So if you added the two together, it would equal that first candle. Well. This is just great. We're not getting anything now. No, we're not getting anything. All right. Well, this would give me an opportunity to get up to get some. We still try to get guests to the airports. So sorry if I've missed a few. Yeah, it's not even working. UNXL, want to stay short. It came up and touched the, we couldn't do UNXL because we brought that one up earlier. Notice that it came up today, touched the T-line, smack dab on the T-line and traded back off. If this opens lower tomorrow, they're still taking it down. And you might have a situation where they take it down hard. Wave 2 is kind of flat. Wave 3 could take it down hard again. Yeah, I broke it. Still not bringing up the, nope. Okay, well, that's giving us a good excuse to get up with everybody. So with that, thank you everybody for coming. Sorry to cut it short. We'll see you all in the chat rooms tomorrow.